right? We're a solid bet on the future of drones. If you don't believe in drones, well, you know, it may be less interesting. And then if you do believe in drones, why us over other folks is because we have a diversified uh, customer base. We look more like an ETF. So if you don't want to go in and try to really figure out the nuance or why one company might succeed or another, if you invest in us, we're kind of doing that.
Welcome, everybody, to Wall Street Reporter's Investors Discovery Program, where we bring you those stocks which have that multi-bagger upside potential. And today we are interviewing Allan Evans, the CEO of Unusual Machines. The stock symbol on the New York Exchange is UMAC. Allan, welcome to the program.
Jack, glad to be here. Excited to get started.
Allan, UMAC is a relatively new company in the drone space, which is, like $15 billion market. A lot of, investors hear about a lot of different companies in the drone space, the AI space. So can we start off if you can give us like just a quick overview of, UMAC's history and, what the business model is?
Absolutely. And we definitely are in the drone space, particularly backpack sized drones. We look a lot like a spin out from Red Cat Holdings. We went public about a year ago. We're diversified ownership, so Red Cat doesn't own anymore. We primarily have a retail channel, Rotor Riot, where we sell drone parts to enthusiasts, particularly FPV, the people who wear goggles enthusiasts. You could think of this a lot like Alienware in the early days of computers, compared to Dell. That's sort of our specific niche. And what we realized is because a lot of people are configuring these drones, that we're selling a whole bunch of drone parts. And so about a year ago when we IPO'd, we realized pretty much all these drone parts were coming from Chinese companies. And that with the move toward American drones and defending the supply chain, there would probably be interest in USA made drone parts. And so we started that process and we started to get USA made parts and audited parts on approved audited parts to start to be a supplier to the drone industry without that foreign dependence. That's become a lot more important since we started. The legislative and the zeitgeist have sort of followed along faster than we expected. So we're just trying to go as fast as we possibly can to fulfill demand.
Okay. And who are your customers? Is it consumers? Is it business, government? Like what's the, kind of if you can give us kind of the breakdown?
Mhm. So first, yes. Historically, it was primarily retail. People come to our store and buy it. We launched a little bit of background. The Defense Innovation Unit, which is a military arm, audits drones and drone parts, and they have the blue list. Whether it's the blue list or the blue framework, which is for parts, that's the US government and a branch of the military going in and saying cybersecurity safe, supply chain safe. And then it makes it a lot easier for people to buy them. All that being said, we put our first parts on the blue list last September. So our enterprise sales are pretty new. And since we did that, in the last about 3 months, 15% of our sales have been enterprise. Now, we don't sell too much directly to government because we don't want that cost structure. We put everything on our website, but we do sell a lot to businesses that build drones and a lot of them that sell to the government. So we
Okay.
have retail customers and then we have enterprise customers and we have some education customers as well.
Okay.
Pretty
And
good mix.
okay. And what kind of revenues are you generating right now?
If you look, we were doing, you probably figure out about 2 million a quarter right now. We've been growing every quarter, quarter over quarter has been the best quarter, and that's without any sort of augmented growth. We've been seeing about 20 to 25% year over year growth. We expect that to accelerate with things like the tariffs and the legislative elements and real focus.
Okay.
So it's not been as lumpy as you would normally expect, or it's not single event driven. For instance, we don't have a single customer that's more than 5% of our business volume.
Okay.
And so that diversity and that, I think, just consistency in the execution of the team has been, you know, it's boring, but it's awesome. I don't know how else to say it.
Okay. And so roughly, let's call it roughly, 8 to 10 million dollar run rate right now. And now I noticed you've made some acquisitions. You have some M&A activity going on. Do you see, I mean, do you see M&A as an opportunity to, again, you're a public company, you have a stock you can use for acquisitions, you have, a lot of flexibility in the space. And I think there's opportunities now. The market's a little, we're going through a little bit of a rough patch in the capital markets, which always presents opportunities. And there might be a shakeout in the space. Do you see, opportunities for, really to grow through M&A, again, using your stock as a currency?
If it makes sense. We're really focused, it may be different than a lot of companies. We're really focused on cash flow. So if you look, we put it out in our shareholder letter, we average only $750,000 a quarter in cash flow burn. So the first thing when we look at M&A is if you're going to go buy revenue, you got to care more about the cash flow than the revenue. Personalities have to fit. It has to be aligned with what we're doing and aligned with sort of our long-term roadmap for the industry. So we're not in a rush to go acquire. And we're pretty thoughtful about it, and we want to be sure that it's not the acquisition, it's the integration that matters. And
Right.
so we try to do a
That's always
lot
the
of yeah. So we do a lot of is this integration going to work? Discovery before we ever even put an offer out there in terms of does it
right.
fit? Do we have aligned values? Are we all looking at this the same way? So
Right.
we're slower than most companies,
Okay.
but we do see a lot of opportunity there.
If you're enjoying this video, make sure to click that like and subscribe button to subscribe to our YouTube channel. Also get the notifications to get updates on all our latest videos. And of course, make sure you get a copy of my #1 bestseller book, 10 Bagger Blueprint, #1 bestseller on Amazon. Gives you my proven framework, the proven system for finding stocks that can go up 10x to 100x. Now look, I've created over $1 trillion in wealth for investors over the course of the last 25 years. And this book gives you that proven framework, a proven 10-step system for finding those stocks which can go 10x to 100x. It tells you the signals to look for, when to get in, when to get out. It goes into fundamentals, technicals, charts, all the stuff that you need. So again, 10 Bagger Blueprint on Amazon, and here's to your 100x.
Right. So there's the market, investors love to hear about M&A, but the reality is it's the integration that makes the money. It's not the M&A is just the sizzle. But all right. So what kind of company? So in terms of if you are looking at M&A opportunities out there, what kind of companies would you be looking at? Again, which would make strategic sense for integration and all that. What are the
So
criteria?
anybody else? I'd say there's two different types. There's, fully operating business units, which is one type, and then there's sort of acqui-hires, or things that can really augment what we're trying to do. For fully integrated business units, cash flow in an aligned way where we see long-term growth and synergy with our core components business. So we have a definitive agreement out there with a Loft, which does software in the US. They do all the FAA registrations. They're solid business unit in and of themselves. Their software as a service. And we really see the domestic market rather than the military market changing dramatically and really opening up in the United States in about 3 years with the next set of FAA rules and regulations.
Okay.
So for us, that's a little bit, all right, it's my job to see the future. The public markets don't really care about 3 years from now, but in 2.5 years, when they're like, what are you doing next after the parts business? We'd be like, well, okay, we have this aerospace management business that enables the new.
So this is okay. So this is the whole point of again these interviews, right? So we want to know is what is it that is going to happen in the drone space? Like, what's the big opportunity that the market doesn't see right now? I think you just started hinting at it.
All right, I'm going to give you my opinion, and it's going to unfortunately be in the public record, so people will come back and tell me where I was wrong instead of where I was right. In the drone market as a whole right now, you're seeing regionalization. So you're seeing Europe care about Europe, the US care about the US, China care about China. With tariffs, with the regulations like the American Securities Drone Act, Countering Chinese Communist Party Act, all these sorts of things. You're also seeing defense money, in particular in all these regions, being like, whoa, drones matter because of the conflict in Ukraine. So that was the real catalyst that drove the whole drone market, I'd say, from last September to about a month ago, where we were part of that rising tide. There were a bunch of other companies that were too. And now it's regressed some because I think there's a lot of uncertainty around the US government spending. Okay. That's a short-term uncertainty. If you look at Hegseth's comments about what's not getting cut, 5 of the 17 categories were drones. But we have a continuing resolution, we have Doge, so we're going to have a little delay in government money. So I think we have sort of a summer of uncertainty. But come September, October, November, when that uncertainty from the larger government actions is resolved, I think you're going to see a real push, a second season of euphoria and income and generation in the US drone industry. Boom. All right. Now that's really interesting. It's really easy to get caught up in defense, but we try to be dual use for a very specific reason. In the same NDAA, the Countering Chinese Communist Party's Drone Act is being passed, which eliminates DJI and Autel from introducing new products into the US market. They, between the two of them, probably sell about 1 million drones a year to businesses, to insurance companies that are doing inspections, to cell phone tower companies that fly up to do reviews, to all these really cool use cases that we see. That, and then the FAA is working on Part 108 and beyond visual line of sight rulemaking, which says, oh, okay, I now don't have to stand there and watch a drone while it flies. I can use like the drone in a box solution, or I can fly a swarm or whatever across the field to do reviews. That legislation I expect to show up in about 3 years. So if we have a military push in the fall, that's going to create a lot of need for parts that can't be overseas. And then that's going to build out this interesting start of an ecosystem, but there's going to be the second, even bigger economic opportunity about 3 years out, where the legislation for creating kind of a little bit of a walled garden, plus the legislation for us to use technology in new ways, collide at the same time. And so we're trying to ride and facilitate the defense companies, because that's pretty important, and that's part of our onshoring, part of what we're doing for America. But we're trying to then position so that after that sort of boost that we expect to really start in this coming government cycle, like the September, October frame, to then position ourselves for the much larger multi-billion-dollar domestic market where the primary companies are being kicked out.
Okay. So that's going to happen like 3 years out, roughly. That big opportunity.
I think that opportunity is going to really start to bloom in about 3 years. A little uncertain, a little legislative dependencies, but finger in the air, right in that time period, that'll open up. So you'll see this first real expansion of the drone market due to this defense push that'll occur starting maybe August. Again, a lot of uncertainty with the government budgets right now. And then people will be like, oh, drones are getting boring, but then there'll be this even bigger push that will occur when the domestic market really opens up.
Okay. So right now, so what do you see? So there's really kind of two opportunities right now. Kind of what you're saying is the kind of the drone space, or the drone story for investors right now, up and for the next couple of months, is going to be essentially it's going to be kind of, I don't want to say on hold, but it's going to be simmering. It's not going to be it's not going to be on boil. It's just going to be kind of simmering. And again, we're expecting kind of sort of big spending push starting around September. But the real story in terms of the kind of the big kind of secular story is this what is it, the FAA Part 108. That's going to be the big driver for
that's the future driver.
That's the future.
Yeah, definitely. The near-term driver is going to be defense money. Yeah, you got it exactly right. And I think the simmer is there, and you don't know who's going to pop, right? Who's going to get through this contract barrier and get some of these great pops. From our end, we have something that actually helps us even sooner. These tariffs drive uncertainty, but there was also a really good Chinese manufacturer called T-Motor, which makes a lot of these parts, was banned on February 14th.
Okay.
So if you can't send money to them anymore. So if you're a US producer and you already have contracts, you probably have 3 to 6 months supply of motors and the other parts, like the motor controllers they sell. We're in the process of trying to build our motor line faster than ever, because the companies already in the drone market that need these parts now have to go find alternative suppliers. And this ban plus the tariffs make us a really competitive supplier. So we have this really neat added factor in the legislative environment to not have the same, I'd say, uncertainty from the government financing spigot impact our next couple of quarters.
Okay.
Because we have this like hair on fire sort of race to even catch up to where the regulations are now. So in that way, like we're going to be fine.
Okay.
I'm not sitting here worried about it.
Okay. So you're saying that because of the tariff and the Chinese situation, there's a massive demand for some of your drone parts, like the engines right now, the motors right now. That's a big.
Yep.
Okay.
Yep.
So in theory, we should be expecting, a breakout revenue quarter. Is that the theory? Or
Not right away, because what people do is they supply chains are longer than that. People sample, they evaluate, they qualify, they figure out the business terms, and they probably have 3 to 6 months of stock, like inventory, to still build into. So you might expect announcements or whatever else. We just put out a press release saying, for instance, Red Cat is the first commercial contract to source motors from us, and we expect to deliver end of March, early April. So you wouldn't expect it in Q1, but you'd start to think you're going to see a higher mix of enterprise sales for us Q2, Q3, where you might see some of the doldrums for some of the other drone companies. And in that way, we look a little more like an ETF on the segment rather than a specific, like, oh, I picked these guys because I think their product's going to win. Like for us, if the market wins and we don't screw up being a good supplier, we don't have to pick. We get to sort of win with whomever succeeds in each segment, and that's what we're excited about.
Okay, so basically, so UMAC essentially, I mean, you're basically a supply. I mean, you supply everybody, or I mean, like in terms of drone manufacturers, you supply what motors? What kind of components do you supply?
Right now, the ones that we have approved are motors, motor controllers, a flight controller, like a low cost one for single use drones, which the military is interested in. And then we're working on, well, we have a camera that's approved, and then we're working on a command and control link and a video link. So we try to sit in a value segment. So there are a lot of other great companies that have high value adds. So they'll sell a flight computer for $1,000. Ours is 50. And so we try to sit in that value segment, which is where China's really dominated, and replace all the Chinese parts everybody was buying, because that's where there's no good domestic alternative. So we see that as a huge market opportunity, and we're not competing with any of these other great US companies. We're ultimately competing with these great Chinese companies that are being kicked out.
Okay, like the JDI and all those types of players.
Exactly, or the T motor or the
Okay.
whatever. So if you're buying these commodity drone motors, you don't want to go buy one that's 4 times as much money, because it screws up your downstream economics. Right? Then you got to go charge your customer more. They're wondering what, you already have a binding contract. It's a mess. But if we can come in with something at a similar price and similar quality, and we're really targeting volumes and lower margin volumes, then you buy from us, we build that relationship. And so we're displacing what is a huge part of the market, which are these Chinese parts that are now being just not allowed. And so, we think over the next year, we don't have to wait on new contracts, because the old contracts are being told they can't fulfill the Chinese parts anymore. So we have the benefit of getting to sort of surf the last wave before the new one shows up.
Okay, so basically, so just to be clear, so for investors to understand, so UMAC does not manufacture drones itself. You sell the components. You sell the picks and shovels to the miners, so to speak.
100%. Now we'll do final assembly for you. If you're like, I want all these parts on a drone, we'll build it for you. That's not a problem. But that's not our primary value.
Okay, so selling now, so you're doing roughly 8-10 million run rate. How how big and how fast can you scale this business?
As fast as we get orders. I mean, we're building this thing to go as fast as possible. I think if you see the domestic market really turn on, or you see orders there, we're in a position where if you said we had to do 10 times the revenue, we'd feel comfortable getting there in 6 to 9 months. We built everything to scale. So we're at the very smallest unit that gets the returns to scale, but we have the supply chain all set up to hit these volumes. You really get these kind of really good price quality returns at about 10,000 units a piece in order blocks. And so we place most of our orders at 10,000. And so we're kind of the whole chain to feed that is in place. So we can just place more 10,000 unit order blocks if we saw the demand. And the
Okay.
real trick is getting to be able to do 10,000 at once. And so that's where our commercial channel and the volumes we do there help us guarantee that we can get those volumes and not sit on a ton of stock.
Okay. So in terms of you mentioned there's the big opportunity, let's say 3 years out, like the market's going to completely, totally transform. We call it, the big, the transformational event for the market in 3 years. But in the meanwhile, let's say, and again, we don't want to get into the forecasting business, but what kind of revenues based on like what's going on right now? Like what can UMAC be doing, let's say a year from now, 18 months from now? Like what kind of revenues, what do you see as the possibility? Can you get to, I don't know, 20, what kind of growth rates can we get to?
Um, a lot of dependencies, a lot of speculation here. Whew, not a projection at all. I think in the real high upside, we could be the primary supplier for a lot of the contracts like SRR and MRR that are coming along. And that could be, upwards of maybe a run rate of several tens of to $100 million a year if we nail it. So if but more importantly, I think, we hope to double, depending on market situations, double our run rate in the next year to 18 months. And in doing that, we also want to cross that to cash flow positive. And so I think it's not about how much revenue we can do, it's about how disciplined we can be as we grow revenue. Once you're cash flow positive, then for shareholders or for the business, you're much less susceptible to timing in the market. And you're in a position now to just stack value year after year, month after month for everybody.
Okay, so just to clarify, SRR, MR, what is that? SRR?
Oh, those are government programs. Short
Okay.
range reconnaissance drone program, which Red Cat Holdings won. MRR's mid range reconnaissance program, which PDW and Anduril won. So these are government programs that are all worth, probably 50 to 100 million a year previously, maybe more going forward. So
Okay. You're saying
supplying
worth.
parts into those is consistent business.
Okay, so you're saying the programs are worth, so the opportunity for you is, you're saying potentially 50 to 100 million to those markets, to those two programs?
No, that's probably the end opportunity. We probably, as a supplier, could capture up to 10 to 20% of that, maybe.
Okay.
But you start to add a few of these programs together, and it gets just that alone, not counting all the rest of the opportunity, gets us to what we believe could be, 100 million a year run rate, maybe in 2 years, something like that, as the
Okay.
market turns on. That's
Okay.
ignoring the potential domestic growth. I mean, we got to do a lot of things right to capture that much market share, but I think we have as good a chance as anybody.
Okay. So bottom line is you're saying that UMAC could be, potentially $100 million revenue company within 2 years. Again, if these things line up, there's okay.
Yeah, I think if the drone market turns on the way people expect, yes.
Okay. Now, what do you see like right now? What do you see kind of as kind of the biggest challenges in the space? Again, there's a lot of players in the space. Like, what's the competitive landscape like? Because you're not the only game in town, right? Like for a lot of these companies.
There are a lot of other people doing parts. Some people want to do them internally. Other people are going overseas. I think what we've done really, really well, a competitive differentiator, is first, it's a procurement problem. So we're willing to get audited and we're on the blue list. So
Okay.
it makes it so if you buy our parts, you can feel confident in that supply chain. And that's been a differentiator. And then the second thing is all our prices are on our website. We're not overcharging. We're competing with Chinese price quality. And so I think why we're not trying to see the same margins that you could historically get from defense or from whatever, I think we just are very honest, like, okay, this is the value segment, these are the margins, and you have to replace some of the Chinese supply chain. If we're not up to that challenge, then we're not doing our customers service. And so I think when you look at the blue list, we're one of the very few companies that sits in what I'd call the high volume value segment. And that's really where we're focused. And so I think that gives us this opportunity because as much as people don't like to say it, price does matter.
Right. So transparency is a big deal in the space. Price transparency. Okay. And
Yeah,
government, the blue. Okay. Um, what, can you share, with our audience, a little bit about, your background and some of the key players, on the UMAC team?
sure. If you go way back in time, PhD electrical engineering from the University of Michigan. I had all my clearances and everything and worked at a national lab. Spun a technology I developed out of that into a startup. It was a VR headset technology. The startup was Avigant. It still exists. It's out, and so moved to the Bay Area, raised tens of millions of dollars from like Intel Capital, et cetera. Was spending 100 nights a year in China building VR headsets. Um, Ended up taking over as the CEO of Fat Shark, which did all the headsets for drone racing. All the manufacturing in China again, fixtures, scaling, and then we ended up combining that with Red Cat Holdings, where I was the COO, and helped uplist that to the Nasdaq. Then really helped scale that company. Since then, we took this over. So yeah, there's a lot of other things that were in there that failed. So I'll be honest, about a 50% hit rate, but it's pretty good,
You only
and
need
the
to, you
companies are
only
like
need to be right
baseball.
once. We always say you only need to be
Yeah.
right once. It doesn't matter.
Uh,
Uh,
Agreed. But so there are a lot of wrongs in there. I'm not going to sit here. I just give you the quick where it was right. And then like Jeff Thompson, the CEO of Red Cat's on our board. We have just a couple of great board members. Our CFO, Brian Hoff, is a multi-time public company, finance guy. Our COO, Andrew Camden, he's been in the drone industry for a long time. He started Rotor Riot and really took off. He was a YouTube drone pilot star for a while, and he's one of the nice things is our entire management team is in this. I think it's like demographic sweet spot. I'm in my early 40s. We're all kind of there where you're old enough to have screwed up enough to sort of be like, ooh, nope, that requires too much luck. Like let's not smoke the hopium and get ourselves sideways. But we're still ambitious enough where we haven't made it.
okay.
So there's that
Yeah.
hunger, that drive, and that energy. And so I think for me, it's really exciting to work with those guys because I feel like career wise and passion wise, we're all in this window where, we're all still very interested in having an impact on the future. And I think with drones and with what we're doing, we have a real chance to, put our fingerprint on it, which is exciting.
Okay. So just a few last questions to wrap up. So, what's your vision for UMAC 2-3 years from now? Again, we got this big event coming out of the transformational event, but if assuming things go more or less right, not everything is obviously going to go right, but what could potentially, again, we're not saying it's going potentially, what's your vision for the company 3 years from now?
We model it on other part suppliers in mature industries. So I'll give you a couple of references, and it might not be three, it might be seven. It's going to be a little industry dependent. So the first thing we want to do is get to cash flow positive. So we're not worried about timing of when the drone market shows up. Right. If we're there and we're healthy financially, then whether it's 3 years, 5 years, or 7 years, we're there when it occurs. And if it's in one year, we're there. It could come faster. The second thing is people always ask me, they're like parts companies. Like, what's that mean? Well, Bosch is a parts company for the automotive industry. NVIDIA is a parts company for AI
Ah,
and
good,
crypto.
good, good reference point.
But so we want to be this underlying engine for the drone industry. And we'd love to do it for the larger drone industry, for delivery, for manned aviation, for everything else. And I believe this middle sort of autonomous airspace logistics category is going to end up being the same size as automotive and manned aviation. And so if we can be an enabler across that entire industry, then, you know, the sky's the limit if you want to be punny about it.
Oh, I get it. Okay, I just got it. Okay, it took me a
Yeah,
little
yeah.
second. Okay, I'm a little slow today. All
But
right,
we want to make the choices to be that sort of underlying engine.
right. So this the logistics. I get okay. So we're talking about the logistics part of it, which hasn't. I mean, I think it's just in the very early, very early days. But how, when we're talking about logistics, you're talking about what, like Amazon delivering, packages directly to your door, things like that, whatever it is.
Yeah, Amazon Zipline, CVS, anybody delivering packages. I want a hot, fresh dinner. I don't want to go to the store. Or maybe your autonomous car is driving down the road and you want a burrito and it just meets you where you're going and you get a burrito. Like, it's not just going to change home delivery. It could change on the go delivery, and the rules for all that, what will really enable it are those FAA rules I was talking about.
Okay.
So we see that regulatory change coming and opening up that whole market.
Okay, so that's really going to be the inflection point for the industry, that what FAA 108. So essentially, that's going to allow this, autonomous drones to do logistics, deliveries, all that stuff. Okay.
Yeah, it's going to be the rules for the sky
Okay.
for this to happen.
Okay. Wow. Okay, so that's interesting. So I mean, in theory, I mean, that could, so the drone space could be, if, once that happens, could be what the drone space could, explode. I don't know, 10x, 50x. I mean, it could be what?
How big is
Where are we
automotive
now in terms of, where it could be 5 years from now?
I think we're sort of at the pre-World War II into World War II moment for automotive. There were cars out there, people were driving in the 30s, but then the automakers ramped up and made tanks, and vehicles became less of a novelty. People knew the horse no longer mattered. And I think the conflict in Ukraine has the same psychological impact that World War II had for automotive. And then when you look, Eisenhower came back from the war and built the freeway system because he saw the value of automotive logistics and put in place the infrastructure. And so I think we're at that point of time where, hopefully the conflict ends, where it's after World War II, where we're all like, oh yeah, drones, duh, why weren't we paying attention? And then I think the 3 years from now, with the FAA changes to the rules, that's going to be the same thing as Eisenhower building the freeway. And that's when you suddenly, you saw suburbs, you saw the whole world change because this infrastructure was in place. And so I feel like, yeah, we're at automotive right toward the end of World War II.
Okay. No, that's very interesting, right? Because I mean, the whole, again, you had all sorts of new industries just developed. You had McDonald's, you had everything. I mean, it was basically a
Yeah,
multi-trillion dollar
all these exactly
driver.
all these derived economies are going to change, and those are the things people aren't even anticipating yet. So we're sort of at that place where the framework and the awareness are just showing up. So to make a prediction, I think, is very challenging because I have no idea we're at the start of the avalanche. Like, does it fill the valley with snow?
So
Hopefully.
you're kind of like, I'm trying to think, like, so in terms of, let's say, automotive, parts, these parts companies. I don't know if it's a Bosch, or I think in the U.S. there's a bunch. I don't even know the names, but not four, but there's a bunch of these companies that are multi-billion-dollar companies, whatever, right? So it's almost
Yeah, we joke we're Goodyear, right? Everybody needs
good.
tires.
Okay, so basically, it's 19 I don't know, 1940 or 1939, and you're basically the Goodyear right before all of a sudden the boom, the post-war boom, where everybody starts buying car and goes bananas. The interstate system. Okay, so
Yeah,
hopefully it's going to be within 3 years, not five. The big
three
move is gonna
three
be
to four.
right, but
It'll
it's
be
growing
FAA
now.
regulation.
But to be clear, like this is like you're growing now. You're not. This is not a something where people need to wait 3 years to make money in the stock or to make. This is right now.
No,
You're
no, 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 absolutely not. Absolutely
okay.
not. That's why I think the 1939 example is great because Goodyear scaled through the whole interim period and all the way beyond before the freeways were there. Like
Okay.
it's not 1910,
Yeah. The early. Right. So
we're
it's
much
not
past that.
okay. Right. So it's not okay. Not model. It's not the Model T 4 days.
We're past the Model T area. Yeah,
Okay.
way past that.
All right. So what's last two questions? What are some of the key milestones or any type of catalysts that investors could look forward to? Let's say over the next 6 to 12 months. Like, what are the potential catalysts that could have an impact on the stock, or what kind of milestones are out there?
I think for us, announcing enterprise orders, so you start to see that we're ticking up that business unit. I think as we post and show stuff on progress for motor production. like electric motor production. That's a big deal. And then what I really think is we'll differentiate from a lot of the other drone companies because I expect just our revenue heartbeat and our cash flow position to be just as steady as she goes in a world of turmoil. With these tariffs, actually, really what'll be interesting is in a quarter or so how the tariffs have impacted our margins, because that could just be a huge positive injection for us, depending on how some of this uncertainty comes out. Because if we're competing, we sell against mostly vendors who sell Chinese parts. So these tariffs just give us 25% margin expansion. What's that do to our business? Does it cause a whole lot of market expansion in addition to margin expansion? So I think that data coming out in a quarter or 2 quarters, leading into what I see is sort of the government then really injecting a lot into drone defense, is a really interesting sort of step up relative to our peers, followed by, I think, another euphoric event.
Okay. So basically tariffs are bullish for UMAC.
Yeah.
So good. Yeah.
It's weird to say, but
Right.
yeah,
No, okay.
tariffs are like generally destructive to growth.
Right.
But for us, they're bullish for us. So we're a pretty good tariff hedge.
Okay. Tariff man, good. All right. So what the last question I have for you, which is, we always ask at the end of these interviews. So in your opinion, what are the key value drivers, that investors should consider, in terms of UMAC? Like, in other words, in your opinion, what's the reason for investors to want to own the stock today?
I think first and foremost, if you believe in drones, right? We're a solid bet on the future of drones. If you don't believe in drones, well, it may be less interesting. And then if you do believe in drones, why us over other folks is because we have a diversified customer base. We look more like an ETF. So if you don't want to go in and try to really figure out the nuance or why one company might succeed or another, if you invest in us, we're kind of doing that already for you. So I think if you were trying to look for a drone ETF, we fit that profile. And then instead of buying the whole basket of goods, because of tariffs and the fact that we're replacing some stuff out there, I don't expect us to have any of the uncertainty in the near term from the government cycle. So you would definitely buy in now and you might follow along with the whole industry. And then come June or July, you might start to anticipate this huge government injection. And then you might go pick up some other names that you think could rip. But I think given our cash burn and our revenue, we take away a lot of market timing risk in really wanting to bet on drones. So I think in a world of uncertainty with tariffs, with who knows on the government, that makes this a really reasonable place to say, this is going to happen. I don't know when. Nobody knows when. But this is an okay place to start to take a position to be ready for when it occurs, no matter when that is.
Okay, so basically, again, you're a pure play on the drone space, specifically, especially in the U.S. It's a pure play on the.
We're a pure play U.S. drone.
U.S. drone,
100%.
okay.
Pure play U.S. drone market.
That's the idea. Okay, got it. Okay, Allan, thank you, and we'll look forward to hearing more from Unusual Machines in the months ahead. And again, so basically, investors should be looking at your news flow in terms of enterprise announcements. Those are going to be some of the catalysts.
Yeah, because honestly, we don't have these single smashes, right? So if you just need to sort of understand that, we're building it one step at a time. And for a lot of people, they're like, oh, there's not a coin flip event. But other people are like, wait, there's not a coin flip event. Like, we don't look like a biotech, it's just growth is boring. And so we hope to be boring, I guess, is
in a good way. Boring in a good way.
Yeah.
Right, fantastic.
Yeah, exactly.
Thank you again.